This video is going to be the battle of the indicators. I'm going to do a head-to-head test on two very popular oscillators. We're going to use Relative Strength Index, or RSI, versus Williams R to see which one is best. I recently done a video showing how to trade the FTSE 100 using Williams R, and it had a win rate of over 85%. And in that video I actually mentioned that you could probably use RSI in a similar way to trade a similar way with similar results, and that's what sparked the interest for me to do this video or to do this test. Firstly, I'm going to show you the strategy rules, which are identical for both indicators, and then I'm going to show you the results, and I've tested it over 4 of the major FX markets on 2 time frames for each market. We're going to be testing on US dollar versus the Canadian dollar, euro versus US dollar, pound versus US dollar, and US dollar versus Japanese yen. And the 2 time frames we're going to be using are the daily or 1440 minute chart and a 240 minute or 4-hour chart. Tests are going to be done on data from 2008 through to 2021, and we're mainly going to use the net profit figure to determine which indicator is best. Once we've seen the data, I'm going to conclude on my findings. And I encourage you to comment too, because you might actually spot something that I've missed. So let's go over to the charts now, where I'll show you how to get in and out of the trades and then look through the results for each market and each time frame. What we can see on this chart is that it's a daily chart of US dollar versus Canadian dollar. And what I want you to look at is both the indicators. Now, the top one here is RSI, and the bottom one is Williams R. And I just want you to notice that how similar they look. Now, I have actually adjusted the lengths so that they look more similar. Williams R is actually on an 11-period length, and RSI is actually on a 5-period length. But I think you'll agree, whilst not obviously identical, they do look very similar. Now, the way that we're going to get in and out of trades, on the chart here, you can see the trades, short trade, long trade, etc. And this is using the strategy using RSI, so ignoring Williams R for this example. Now, what we're looking at is the levels. We're looking at the levels of 20 and 80 to enter trades. So when RSI or Williams R drops below 20, we go into a long trade. And when RSI or Williams R goes above 80, we get into a short trade. Now, it's not a stop and reverse type strategy. We're actually using different levels to get out of the trades too. So if we're getting in the trade, in a long trade, when it drops below 20, we exit that long trade when RSI or Williams R goes above 70. So we could exit the trade, and then RSI could then drop back down, and we wouldn't enter a short, because we only enter shorts if RSI goes above 80. And the opposite for short. So if we're in a short trade, RSI has come above 80, we exit the short trade when RSI drops below 30. So that's a simple test. For this test, we purely want to look at the behaviour, so I haven't included a stop loss. And how I've done the test is I've done a separate strategy for each RSI and Williams R, and then all I've done is I've run an optimization looking at the different lengths of the indicator. So in this case, RSI is 5, Williams R is 11. That's just for demonstration purposes. I've actually run a series of optimizations, which you can see here. This is the RSI strategy, and I've run an optimization on the lengths from 1 through to 20, and I've done exactly the same using just the Williams R rather than the RSI. I've gone from 1 to 20 to see which ones are best, which ones make most net profit, and looking at the average trade. But mainly in this test, we're looking at the net profit. And I've put all of these reports, all this data, into some spreadsheets and created some graphs so that we can look at the data a little more easily. Here's the first set of results in the spreadsheet then, and this is using US dollar versus Canadian dollar. Now, I'm going to run through these quite quickly just to keep the video at a reasonable length. Now, all of this data on the left-hand side is from the daily chart of US dollar, Canadian dollar. The results are down here, and all of this on the right-hand side is from a 240-minute chart. So what we're looking at on the chart, on the x-axis we've got 1 through to 20. Now that's obviously the length of the indicator. So where we used a 5 period, a 6 period, in this case it will be a daily, so 6 day, 7 day. And we can see on the y-axis is the net profit, and on our key here we see that blue is the net profit for RSI and the orange is the net profit for Williams %R. And looking at this one, RSI early on, 1 period, 3 period, 4, 5 did make a little bit of profit, and later on, but for the vast majority, look at Williams %R. 8 seems to be a really nice stable area for Williams %R, but pretty much anything from 6 through to 19, 20 worked quite well on the daily chart. Looking at the 4-hour chart, results are quite different. Early on, both indicators worked quite well. Williams %R again is stronger, and Williams %R has a stable area. RSI is a little bit more sporadic and just doesn't quite work as well. Now we're looking at pound dollar, both 1440 and 240 minute time frames, just like before, and it looks quite different, doesn't it? So notice on the daily, 4 period, 5 period with RSI looks quite good. Williams %R is pretty awful early on, and then Williams %R, as it gets a longer length, tends to work better. On the 4-hour chart, again, results are quite sporadic. Williams %R works quite well early on, then it works terribly, whereas the opposite is for RSI. So in this case, I would say RSI was the more stable and probably stronger indicator to be using with this type of strategy. Before we look at the rest of the results, if you're finding this video interesting, please do me a favour and give it a like now. Now we're looking at dollar yen, both on the daily and the 4-hour, and we can see that RSI looks pretty good early on, some strong and possibly slightly stable area through these 4, 5 period RSI on the daily chart. Then the net profit drops off quite a lot and nothing works, but then look, when we start to go to the longer lengths, Williams %R works a bit better. Looking at the 4-hour then, RSI works quite well actually throughout, and there were some negative periods, but then the opposite for Williams %R. Williams %R didn't work at all for any of the periods on the 4-hour chart. And the last one we look at is euro dollar. Now, notice early on the daily chart, RSI looks quite good, and then pretty much nothing works very well, apart from Williams %R does pick up a little bit towards the higher levels, so sort of 14, 15, which we can see here. Looking at the average trades, they're still pretty low. I mean, 105 on the 15 period. It's probably a usable strategy there. What about the 4-hour chart? And we pretty much see nothing works very well at all. Both indicators work badly. There are some odd little spikes using RSI, but with something that's giving results that sporadic, I certainly wouldn't be entertaining it on this strategy. Obviously then, I could have tested way more variables than I have actually done. We could have looked at more different markets. We could have looked at different levels of the indicator for the entries, the exits. We could have looked at stop losses. We could have looked at additional filters. How far do you go without making this video 3 hours long? US dollar versus Canadian dollar was the first test I'd done, and looking at Williams %R, the results were really good. And I thought, oh, actually, Williams %R must be really good. Those of you who follow me realise that I don't use indicators all that much in my own strategies. I often create them because it helps guys like you who don't use automated software to be able to use mechanical strategies with indicators. So I haven't done a massive amount of testing with Williams %R, but when I saw it on US dollar, Canadian dollar, and it worked really well, I thought, actually, this might be way better than RSI. But as you saw, as we moved on, there definitely wasn't a clear winner, with Williams %R or RSI. What do you think? Do you think there was a clear winner between the two? because looking at the results, nothing jumped out at me. Nothing was screamingly obvious which one worked best over those four markets and those types of strategy. But there was one thing that was obvious. So hopefully this video wasn't completely a waste of mine and yours time. What I found actually was obvious is that nothing works best over the whole lot. So, and it goes back to what I found out years ago, and what I've always been saying is different markets and different time frames react and behave differently. So just because one indicator works well on one time frame on one market, don't take that exact same strategy using that indicator and try and apply it to different markets, because it won't work, because markets move independently and they have their own behavior. So, and that's what we found out using these two indicators. You know, one of them didn't work the same across all different markets. And that brings me to another thing that I'm always saying is you have to test everything. So if you find a strategy with an indicator, or even if you're not using indicators and it works well on, say, euro dollar on the daily chart, don't assume that it's going to work on others. Make sure you test it first. Test it on different time frames if you want to apply it to different time frames, because they all react and respond differently to each other. But that said, I hope you did enjoy this video, albeit slightly different to normal. If you were looking for strategy videos, then have a look at some of my previous videos. There's lots of videos there that gives you ideas for actual trading strategies. And let me know what sort of video topics, video ideas that you would like me to make, so that I can make videos that are most helpful for you guys too. And until the next one, this is Jared Goodwin, and thank you.